Hello. First things first, we actually use the hotkey. Like we actually use the hotkey to start for the first time in like I don't know when. Okay, so first things first, we can see if it's gonna look for buy side liquidity right there, just as we currently watching because the market seems to be up in a move. It seems to be in a rush to get. I don't have my mouse today, so we're gonna have a pretty wild ass session and fair. We can look to see if it's gonna look for higher prices there, targeting those highs. Right there, we do have the small inefficiency there as well. We do have sell side. We will dive into the specifics as we go. But first things first, we learned how to use the hotkey. Shout out to the student who kind of helped me see that. And also when I do end the stream as well, it's going to be through the hotkey. Like it's 2026, bro. Like it's 2026. You know what I'm saying? So we gotta be able to do these things. But first things first, we're just going to tape read the session for about 30 minutes to 15 minutes, and we're going to then dive into the review of what happened in London. But you do see the first hour of trading opens and continues to gravitate higher 30 minutes before the end, basically, or the start of the next 30 minutes. We just have the previous hour's high just shy of that. We have two relative equal highs, which is indication of potential higher prices targeting that. The range between where we currently are and there is 25 handles. That's a decent amount. That's $400 on one mini, if you'd like to get that. But before we dive into the specifics, we gotta get into the mode of studying. So personally, I love studying inefficiencies in time, and when I look at a specific hour or a specific range, like a 30-minute range, it doesn't really matter. It's always contextual, and I love seeing this. So we do have 50%. We can see if it's going to gravitate to 50% of this current range, or even take out the lows. I'm not sure, but we do have 50% here. But what I would love to dive into is if you look at the current hour from here to there, where the retracement begins, where we have sell side liquidity resting right below there. And also we do have sell side resting right below these, which we're going to tag in a few seconds. But what do we have as we lead into the 50% level of this range? We have the first, if you have a look at it, most probably the second, but we do have the first one here. Personally, this is what I'll have a look at. I personally prefer it being a breakaway gap, but I'll also look at it from a 3-minute perspective personally. We do have the preferably 1 minute, bro. But it's cool. Even if it misses it, it will kind of piss me off. You know what I'm saying? It will kind of piss me off. Literally. First in. Like I'll never be able to spell inefficiency. I promise. Like whenever I'm live streaming or even recording, trust me, it's not gonna happen. We do have the first inefficiency post. To be specific, the first bullish one. You can look at the first bearish one, it's cool, but this is kind of what we're studying. And we do have the second one, which is right here. I wonder if my screen is too small, but I am looking at the only 30-minute range, bro. I don't care what happened 6 hours ago. I don't care what's on the daily chart. It's 2026. We're not looking there. We do have this inefficiency here, which is the second one, which could support price and potentially send it higher. Preferably, if this didn't fail, that would have been the perfect objective long, targeting that. But we are in a deeper retracement, and don't be shy to expect that, especially when you're tape reading, because there's no money involved. Like what the hell? I'm not gonna lose money over this, you know. There's no monetary risk, so you can explore price a bit. You can press into different models in which you would love to study, which you'd love to see, but there's no need for that. There's a need for that, actually. It would be preferred if you do. And I don't have my mouse, so I'm going to try my best to kind of leave it there. We do have sell side liquidity engaged, so this is a potential turtle soup So anywhere below here you can go long depending on your risk tolerance. That's kind of how I would view it. But personally, I would love to wait for that inefficiency to get traded into if we ever do. That's kind of where I'll study potential longs. We do have relative equal lows here, so if you do get tagged, it's okay. Don't be shy. Don't be shy. So as soon as we enter that, should we? Maybe put it closer to here. So as soon as we tap that, that's a beautiful long opportunity. We just stop just below here. If we do get efficiently moved, then it's a long day in the office for us. It will be a potential run on sell side from here, and then you can look to see if it's gonna target buy side. If it doesn't, then trace study is null and void, and we will call it a day. We will call it a die. We'll just go straight to studying. So anywhere below here is a long. Anywhere, preferably, I would love that. But when can we expect a potential turn? Okay, let's be a bit facetious and say same thing as between the range between 2:30 and 3 o'clock. 15, you can expect a potential turn. If not, it's a potential acceleration to sell side, and that's okay. Where they'll do a potential murder on macro and murder on close, and that's cool. But everywhere here is a potential selling opportunity if you're looking for shorts. Personally, I don't want to see that. You want to see higher prices because we have engineered relative equal highs. The hour opens and spools higher, leaving a buy side intact, which is basically free money. If you do miss this entry, it's okay. You can potentially wait for the next inefficiency if it does present itself. So if we do see it take out this low, that'll be very, I won't say the best price action. If we do see this high stay intact, meaning this candlestick closes the way it's printing currently, it's going to be a long day in the office for us. We're most probably going to get stopped out. So this is basically the turning point in which you should see it either go higher or go lower. And if it stays within the range of both those highs and that low, then it's okay. You just have to wait for time. And if it accelerates in one direction, you kind of know the reason why. And you can always restructure yourself to enter longs. You can study the shorts, which is very important. I did tell my students that this session is going to be more for the coming days. It's going to be more lesson based. We're going to study more price action, just talk about the urban flows, because you want to note why you're studying a specific inefficiency relative to time. And when you're studying it, why, I won't say why the other variables don't matter, but you're studying a very specific range, which is an hourly range, and you're looking for it to target either the previous hour's low or the previous hour's high. And so the fact that we trade into it, that's a beautiful one. Personally, I wouldn't take it at this time, just based on current price action, because it could just accelerate for these two lows here and then run higher. But as let's say what do they call this? Since we're studying, there's in long, there's no reason to not press against the idea. I do feel a bit of, I won't say anxiety, I do feel a bit of, I don't want to place an execution, because I don't want to be wrong, but I'm not interested in doing that. Like, that's not what I'm here for. When you study price, you just literally watch the urban flows. You're not interested in getting it right or getting it wrong, because I've noticed when it comes to teaching, students will usually ask, when you get it wrong, or how do you identify when not to do something. It's basically this: I'm not engaged in risk, I'm not engaged in money, and I'm looking for one side of the market which is potentially longs. And I do have specific areas marked, specific levels. Personally, I do have 1, 2, and 3, which is this one, within this current range and time. which is 45, where you expect it to spool higher. Personally, you know me, I'm a 20 handle trader. We'll check from that entry here to where we currently are. Is that 20 handles? It's 23. That's a beautiful 30 handle scalp. I'm done for the potential day. And you're waiting on time, you're waiting on a very specific variable, and you watch it play out, and you're not really interested in the mini the no, I won't say noise because that's very facetious of me. And also we are having a look at the, I want to say, if you know, and I hope one of my students is listening, because if I say this is the last inefficiency within this range, yeah, you'll have you'll have a nice day. But literally, when you look at it from this perspective, just from that entry to where current price is pulled, that's 33 handles. That's beautiful. If you want to do see the hold, continue to see gravitate to that, it should break above this. Personally, I would have loved to see a body close, and I attempt to see body closes above these, which indicate signs of potential higher prices targeting the range high within a very specific time. But the very simple idea is you're studying a range, and within that range, you're studying the first inefficiency relative to the perspective you're looking for. If you're looking for longs, personally, it's not a urban rule. I don't want to say that because it's all about reading price action and being in tune with it, and not really make not. I don't know what to say. It's more like you're focused on everything other than what's currently in front of you. You're stressing about indicators, you're stressing about this, and it's very simple. You're looking for a very specific turning point, and you're looking for time to carry that turning point from one specific inefficiency to liquidity relative to the current range you're dealing with. And that's the real important part here. Your ability. I'm in the kitchen today. I got my pressure cooker on, so do forgive me if you hear a bit of noise there. And also, if you look for, if a first level of retracement were to occur, it will most probably start now because we are within the last inefficiency there. But you want to see continuation going higher, heading into 250, just blasting past that high. And not a deep retracement. If we do, then trade setup is null and void. You can move your stop to break even, in my opinion, just above here. And if you do get stopped out, it's okay. Personally, I would move it just below there. I want this to play a breakaway gap, and we should just see pop above there. But it's cool. It doesn't really matter. Personally, I would have been out of the execution already. It's a beautiful 43 handle execution. Potentially, you can milk over 50, 60 handles just off this run. But what's important here is being able to recognize where you can execute, where you would put your stop loss, and what you're studying. So every hour, every 30 minutes, every interval in time that you look at, that's how I look at it. You have a very specific range, or a specific point that you can make reference to give you information on what the next hour is going to do. And that's how I became a high frequency executor. I didn't do that by freaking personally. I would say, oh man, like, yeah. Let me just move it here so that I can screenshot this for documentation purposes only. We should see this turn inversion for potential longs. You can move your stop just below that, in my opinion, like literally just here. If it does stop you out heading into the macro, then you tried your best. There's no need for you to fight anyone. There's no need for you to be anything. I don't know. There's no need for you to fight. Just execute. But anyways, I'm getting a bit too excited because we are getting closer and closer to my target. But what you're doing is you're split. I would definitely take partials here, God knows. I will remove this. Definitely right there. We have engineered relative equal highs right there. So I'll watch that. But when we can keep it there, we can see trade into that, but personally you don't want to see it. You want to see use this for a potential blast higher. But and also I just want to mark the range from potential entry. That was a beautiful one. To here is 50 handles. It's beautiful. When you're looking at any given hour. What you're doing is you're specifically studying an inefficiency, and that inefficiency, whether it's bullish or bearish, doesn't matter. Personally, I love the first opposing one relative to the one that currently prints, because that gives you a sense of what's potentially going to happen, how it's going to happen, and why. And within the next hour, if you're patient enough and you have a clear draw on liquidity, you can literally look for these points, for points of support and resistance relative to when we provide a retracement. And the more you do this from a study point of view, is the more you know when not to do something and when to do it. And when you review this video, because I am going to watch it, it's pretty beautiful. I prefer watching this without any noise, just me watching it and just making annotations. And you do see me executing these levels, but the ability to stick to a specific focal point within a specific range, and you're expecting the time in which you're on the other side of the liquidity to not liquidity, the other side of the, it's basically the other side of the cycle. It's how they intertwine together, because without this hour printing the way it did, then this hour wouldn't do the way it's doing. It's kind of coded to do it that way. But and also this would have been a beautiful place to put your stop as well, just below there and below that as well. But anyways, when you do look at it from this perspective, it becomes awfully easy for you to understand where you can find potential reversals, why liquidities form at specific points, because why is there sell side liquidity forming right here? Technically it's because of this, but when you're looking for it for a profit objective after we've cleared buy side, it becomes easy for you to trust that we're going to clean this and most potentially go to these relative equal lows, and that's kind of the gist of it. We should see it still raise higher. I'm looking to see that if we do raise deep into sell side and take out that, then potentially sell setup is null and void. I won't lie to you. I wouldn't want to see that. I would have already had my stop just below that. If we do see it dig anywhere deeper here, then basically it's going to be a long session, and I don't want that. You want to scalp, you want to get what you paid for, and if it doesn't really squeeze, then don't force it. Just let it breathe. Let it do what it has to do, and if it's going to retrace, then call it a day. Because I'm a 20 handle executor, so from here to there, it's already 50 handles, and from here to current stop loss, that's 34. So I have more than enough. I've taken partials, and it's okay. It's best to calm yourself down as well. It's best to know what are you willing to accept and what are you not willing to accept. Being able to let go, and you can only do these things if you're moving your stop relative to how you would within the real financial market. So we have swept sell side there, and if personally I don't think it will, but if this doesn't book the low of this current minute that's printing, and the next one doesn't really open and trade below it, then our stop is next, because we are gonna, come on, work with me, we are gonna trade into this inefficiency, and trade setup is null and void, and you will get efficiently removed, and it's okay. It is okay. And also sometimes just leave your stop where it is, especially if it's on the low end and you're already at break even, because you're going to put yourself under unnecessary pressure. But always know what you're here for, and don't try to squeeze more than what it's worth. And since we've had a deep retracement from here to there, so for example, now that we've printed that, if this candlestick takes out that low, obviously our stop is next off E. So you want literally this minute heading into the next one to continue spooling higher for buy side. And if we take out that low, then trade setup is null and void. That's basically the gist of it. And then we can go to the review. And the review is basically the same thing I did here, but with an execution. It's beautiful. That's kind of the gist of trading. You're basically doing the same thing every day, every week, and you don't stop. But I will get efficiently removed there. It's basically doing the same thing every day, every week, and you don't stop. But you can tweak it relative to time. The first 15 minutes, 30-minute intervals, 60-minute intervals, 4-hour intervals, whatever you're comfortable with. And when you see price, trading like this is it's going to be beautiful longs. It's going to be beautiful. Even if we trade into this inefficiency, which it can do, I don't mind it doing, but it's going to be beautiful. We still haven't been efficiently removed from the marketplace. Personally, I would have already expected it to by now. We do have relative equal highs here as well. So if you do still have your stop below there, or you have it at break even, or you haven't moved it at all, it's okay. It doesn't really matter. But we should see it get efficiently removed. We do have that inefficiency there as well, so we could use that. You can pyramid. I don't want to. Preferably, I would have already expected to have done that. You know what I'm saying? Like NQ, you're not working with me. You're not working with me. And NQ tends to get a bit, hard to work with at times. Not because it's a bad market, but because it tends to want to take liquidity more than it wants to run. Even when you see the bodies like this respecting this high, the wicks, bro, the damage, you know what I'm saying? They want to clean that liquidity. They want to take Alfie out. It's the rapid repricing, because he talks too much. Yeah, it's like he knows everything and knows how to time the financial market, but he doesn't. He's a noob. He just started training 2 weeks ago. But personally, you're just waiting for that displacement. The most obvious time in which it will do it is 0 o'clock. Why? Because it's 0 o'clock. It's 0 o'clock. Like, everybody knows 0 o'clock. If I say we meet at 7, we meet at 7 o'clock. If I say we meet at 3, we meet at 3. That's not an injection of volatility, but it's just when the different schedule begins to start, and the delivery schedule is usually within the direction in which you're anticipating, or it will engineer power of 3, where it trades lower just so that it can go higher. And that's okay. That's really okay. It can wick, and wicks do the damage. Bodies tell you the story, and don't be afraid to take your L. And that's what's really important, is the ability to walk away. And most people don't have that because they don't do this. They always, it's all, especially the people I be seeing on Twitter, man. They always like, I want to execute, like I need to be in a trade. No, like trades create emotional stimuli, and if you're not right and unquote wrong, you get really anxious, and it dims your performance. It's almost like I almost said something so inappropriate. No, filters off, you filters, bro. So we are 3 minutes into the next, almost said 15 minutes, but the next top of the hour, and so far we're just consolidating, nothing much to work with. I am expecting to get efficiently removed, meaning to get stopped out. So I've already made peace with it. I'm not anxious about it. I think we did. Yeah, we did get efficiently removed there. Yes, we did. Technically, we have been efficiently removed from the marketplace. So technically, fair. I'm not sure, bro. I'll leave it. I'm not technically, God knows, I've been clapped out of the financial marketplace. That's okay. It wouldn't be that much of a train smash. Most probably they're listening. You never know. You never really know, right? But what's important is to always tape read. What's important is to identify very specific levels. The one I'm marking here is the first inefficiency. That's bullish within this price range. The one I'm looking at here is the last bullish one within the same range. So nothing fancy. I'm not looking at the small, intricate ones. The middle one you can, but those are the only ones that are my primary focus. We've already done the function of trading into that. Excuse me. Now we're retracing, and we're performing the function of trading into that one. We do have deep discounts and deep premiums here, which you don't want to see, which is not, it's not signs of an inefficient market, because that's what you want. You want an inefficient market that really runs within your favor. But if you get an efficient market, it will trade into there, consolidate, and then spool higher, and you kind of wasted your time, and not really wasted your time, but it defeats the purpose of scalping. You're here working longer than you should, and you out here making decisions, whether you believe you're right or wrong, and that burns mental capital over time. and the more mental capital you burn, the worse it gets. So, for example, personally, I do expect it to spool higher. Like, duh, because we're in the longs, so like, hello. But technically, we can see it just wick low and take out these babies. But that's kind of how the market works. You know, it engineers relative equal highs, then drops lower. Like, ugh, it's so draining. But literally, that's the gist of it. I really want to go to the review and I really want to hit a target. You know, it technically, in my opinion, it hit my stop, bro. Like, I'm not gonna lie to y'all. I'm not gonna act like I'm this nose. It hit my stop, bro. No matter how much I, as my mentor would say back then, tag, baby. But you know, but technically, if I'm reviewing it for my personal own reasons, I will say this is the potential execution, and that's where the longs and I would have taken partials right there, which is beautiful. And that's basically it. And yeah, we in it, we in it, we in it, we in it, bro. We in it, we in it, we in it. But it's beautiful, you know, where you time the market. My students are gonna love this. But anyways, that's not the point of it. But we're gonna go into the gist of what happens in London and how I incorporate that same phenomenon, but using a different time-based model, right? So here we have, oh my goodness, this chart is so beautiful. Everything you can time, like, don't be afraid to think you can't. But what happens is every day I start the day per usual. I study the o'clock, which is this. Then I study the 1 a.m. You mark the highs and lows, but this time when I got into the financial market, I did note the 2 to 3 o'clock. So usually here's where I study the liquidities formed. I study within the current hour I'm dealing with, which is the 2 to 3 o'clock hour. You see buy side liquidity, there's sell side liquidity, and you have sell side there as well, which is basically 50% of that range from that high to that low. That's 50% if you look at that. But that's not the important part. The important part is when the next hour prints and you're looking from from 3 to 4, you see it engineer potentially relative equal lows. That's cool. But what you're basically looking for is you're looking for a shift in market structure, right? You're looking for telltale signs that we're going to either take one side of the market pace relative to the other. So the way to identify that, or how I look at that, is I just technically study the buy side and sell side liquidity. So you study sell side there within that hour, buy side, sell side. Buy side gets tagged shallow. This is two relative equal highs. The bodies are not really above it. Rolls lower. So that shows me we're going to go back into that. If the bodies are not above it, false. We roll lower and we take out sell side. And when sell side gets taken, there's no body below that. So that becomes a focal point, meaning we're going to tag it later. Right? We run higher, bam, we take out buy side with the body, bam. So meaning if we ever print a swing high, the likelihood of us taking it out might not happen, right? Technically it can, but that's my philosophy, the way I'm thinking about it. I would love for that to be a protected high. So what do I want to see if I wanted this to be a protected high? I want to see a potential shift in market structure. Where would I look for the shift in market structure? The same thing we did between the 2 to 3 o'clock hour, the 2 to 2:30. We're looking for the first bullish inefficiency and the first bearish one, or the first opposing one within whatever direction you're looking at. This is the first bullish inefficiency, and this is the first bearish one. This is literally what I marked. I already did it. I was trading it in the session. The first one post a very specific time, which is the London Silver Bullet. So this is very important to me, meaning I want to see body closes below here. I want to see acceleration when we get anywhere near this level. If not, then we're just going to stall for more time. So beautiful. What happens is we do see trade higher, trades within this, and we see a small consolidation goes there. This would have been a beautiful short, but it does race lower. I would have loved that, in my honest opinion. Then o'clock opens, and instead of seeing it roll lower, you see it kind of race for buy side just one more time, and that's okay. You might have, personally, I do think like that would have been an easiest sell to kind of efficiently remove. But if this was one range in terms of a candlestick like this, there, that would have been preferred. Then I would have loved to see sell side continuation, but we didn't. But what happens here when 4 a.m. hits? What I always try to tell my students is study the time within 3-minute intervals, like study every three minutes after every hour, 6 minutes, 9 minutes, 12 minutes, etc., etc., and 21. When you're studying swing highs and swing lows, these things form at very specific times, and 21 is one of them. If you're studying at any top of the hour, the first 21 minutes, and you can ask me 21 minutes why, when, how. I'll explain as time goes by, because I don't know how to translate it just of yet. I do know how to show you how to use it, but to translate it into a language in which you can say, I trust this with my life, no. You just need to see it multiple times, and you genuinely need to study swing highs and swing lows, because these form at very specific times. And once that happens, and that books a potential swing high, meaning you wanted to book a high and you want to see racing in one direction, that's literally a time in which you expect a change of state in delivery within a specific time window. You're looking at chasing the opposing side of the liquidity. It takes approximately from that high to that, that low to that high. It takes 2 hours to print, most probably 3 hours. And here it literally does it in taking out that low in 45 minutes, which is insane. Literally 2 hours less, and that's kind of what you're looking for. That's the sell side liquid. That's the potential run. But your focal point for entry or execution or getting in short or long is always predicated on what you can see within what time gives you. And when you're looking for time-based models, they always, you can, if you want to get comfortable with them, that's kind of what I'm trying to show here. If you want to get comfortable with them, study something that you trust, which is a level in first inefficiency or fair value gaps or whatever, and just watch how time books swing highs and swing lows. And when we trade into your level, can you spot relative equal highs or relative equal lows and use that as means for going long or going short? And it's all times. The rules of engagement is you wait for the first 21 minutes of any given hour to book the swing high or the swing low. And once it does, you look for a retracement that occurs between the 24th minute and the 33rd minute of any given hour. What happens is when you look at this, between 24 and 33, right there, that's a beautiful. Don't extend. That's a beautiful. It's beautiful. I will never lie to you. It's really beautiful. It's a beautiful potential longing opportunity within this range. I mean, shorting opportunity within this range, because this booked the swing high. If it broke the swing low, you would have looked for it at the opposing direction. And this is time based. You don't need a you don't need a chance to see it. You just need to understand it. 0421 or the 21 minutes or any given hour book a swing high or swing low after taking out buy side liquidity within a potential power of 3 relative to specific level you're studying. You know, for example, the first bearish inefficiency forms within these 2 specific levels. Let's mark just one here, just so that you can have reference to it, because I hate the fact that I don't know what number it is here. So when I screenshot, I can't see. But this is the level you're studying. And look at where 4 a.m. opens. Literally opens just below there, and when the spooling occurs, it occurs right at very specific level, random. Then we continue to spool higher, taking on buy side liquidity for the previous hour, leaving the previous hour's low intact, leaving the previous hour with no bodies below it. Bam, we get to see retracement there. Beautiful retracement back to first inefficiency post. 3 a.m. right there. This looks so much cleaner. Beautiful right there. And when you look at it from this perspective, I would have loved to enter short here, but I wanted to kind of show focal point on this. Beautiful, we see trade into that sell side. We do see it open top of the hour, spool in one direction. what do you see? Books swing lows. At what time? 20? Potentially within the 21. You can look at it from this perspective, but if you look at it from that, this to there, that's literally a delivery schedule. From that, sell side, buy side. Buy side, delivered all the way to sell side within that 1 hour, right on time. This halfway point, retracement, beautiful. Catch the final pull. Then we change direction, go back. Beautiful. What time do we trade into this? 33, 34, 36. Beautiful. I love seeing 36. But anyways, when you start seeing price form, or you study price from a very specific point of view, where you're studying time and you're studying top of the hours, because that's kind of what you're trying to do. You're trying to make money. And you're trying to make money every top of the hour. And don't let any goober on this earth tell you that you can't time the financial market, because you can. When I started, I was not this good. God knows I wasn't this good. God knows I couldn't see this for anything. But the more I got patient with myself and I got better at efficiently being able to understand how I react relative to pricing, whether I can trust specific narrative, because half the people that claim they know what they're doing and how to teach you, they don't eat from the same things they teach. And I genuinely believe this is beautiful, man. Today I will never lie to you, bro. This is insanity. Are you guys seeing this? Like, this is beautiful price action here, bro. Like, if with my boots loose, I would have manhandled these markets today. But peace be upon it. But anyways, that's not the point of this conversation. The point of this conversation is to just kind of give you introduction on just watch me do my thing. And with time, you'll genuinely have the ability to execute at the utmost of efficiency. But when I really say study specific turning points and specific times, I'm dead ass serious about those, because you can set schedules to them. My goal, and I won't tell you my why. As time goes, then hopefully God, if God gives me the strength, I will. But for now, it's a promise I made to Him, and you have to take this seriously. You are born in a world that everyone around you is telling you what you can and cannot be. They telling you where you should and shouldn't be, what you should and shouldn't do, and eventually you're gonna die and everyone's gonna forget about you. But for the time you're here, do as you're told, and that's sad. That's kind of the reality we're born into, and everything's controlled, everything's rigged. You're born into a system where you have IDs and passports, where everyone is digital numbers that can be tracked. You're born in a monetary system where every rand or every dollar or whatever is tracked by a certain code or a certain number. Everything digital is tracked, and for us to believe that the financial market isn't is just pure ignorance. I'm African American, I'm black, straight up. And I'm in South Africa. We had something called apartheid, where it was white on black segregation, where basically white people one side, black people one side, and we had that for it's okay. But my mom had to live through that, and her grandma had to live through that as well. And before that, it was basically slavery, and that happened for 400 years. And you're telling me that you're born into a world in which people have the ability to do that or have that certain level of control, but in a monetary sense, they won't exploit it, but they can exploit actual live human beings and do that, kind of torture them for like 400 years. That's kind of ridiculous. So of course these markets are rigged. You can time it. You can get in at the highs, get in at the lows. You can just get in here and read it just like the way I did. It's possible for you, but in order for you to get there, you just have to kind of break your beliefs, because everyone is telling you who you can and how you should and shouldn't bloody learn, and that's not the truth. I'm awfully calm today because it's at night. It's African time here. It's freaking 14 minutes past 9 a.m. here. But literally, man, you're literally born in the most manipulative time in the world, where information is rigged, where they tell you what you should and shouldn't believe, and they want you to believe what they want you to believe long enough so that when you die, no one gives a F. That's the actual truth. So you'll find a few oaks like me who are willing to kind of sit with you and look at those, baby. This is free money today, bro. On Jesus Christ knows I would have been all over this, like white on rice. like, oh, I don't rise. But all this is timed, man. There's nothing you can and cannot do. But that's basically the gist of today's conversation. And I don't want to make it too long. I love you guys so much. Thank you so much for blessing me with your ears, and I'll see you again, same time, same place.